Joseph, Barclays has followed Lloyds and Deutsche Bank in pre-announcing mixed bag earnings. What are we to make of all this? Why can't these banks just report when they're supposed to report?
Well, you could as well ask, why can't these banks report in something resembling the English language as well? Right. I mean, part of the problem is bank earnings are now a sea of underlying figures, adjusted figures, and so on, which makes obviously anticipation of the full results quite a big deal. But the pre-announcement trend, if we can call it that, seems to be just sensitivity about what numbers, either underlying or adjusted, actually get into the market.
Yeah, this is what is hard for me to understand. There's speculation in the market, big deal. You know, let them speculate. I have a set of numbers. It represents the economic performance of my institution. I put them out on earnings day, and of course there's speculation beforehand. It's the stock market. Why bother with the pre-announcement, and why worry so much about pre-announcements as an investor?
Yeah, I mean, if you looked at the Barclays numbers today, there are only really two of them. You would say, oh, look, this is the market working as normal. So Barclays reported a sort of adjusted profit before tax of about 5.9 billion, and then a statutory profit before tax of about 2.9 billion, more or less.
These were reported in isolation.
These are fine, yeah, right? and also then the share price, more or less, was pretty much unaffected. It kind of rose with the market. So it looks like, shareholders weren't too bothered.
Right.
But if you're an analyst, for example, you only got these two numbers. And if you want to look at, for example, credit valuation adjustments, it's an incredibly complicated but important part, which affects, profits.
Right.
You will not be getting those numbers until tomorrow. So there's going to be like a delay in what's going on.
It would seem that the bottom line number could represent an infinite variety of realities on the P&L and the balance sheet and, right across the cash flow statement. So what's the point? Why give us this little dollop of information in isolation that could in fact mean a variety of things? Yeah,
I mean, if they are worried that, there is, numbers are going to affect the market badly and so on and so forth, they should just release everything at once. That's actually like the first rule of like crisis management. Get everything out. Some of it might be bad, some of it might be good, but it's really up to the market to decide. Otherwise, there is a suspicion that effectively banks are getting out good news on profit or PPI costs or whatever just after bad news.
So the risk here from an investor point of view is not so much the flow of information but the potential damage to the reputation of the bank in a world that is very much attuned to banks' reputations.
Yeah, I agree. Yeah.
All right. Thanks, Joseph.